Yes, people, a very happy afternoon to all of you. So, guys, finally, after discussing the balance sheet in length and breadth, all the theoretical aspects are now completed. But yes, 10% here and there is still left over, which I'll be doing at the end of the chapter. But from today onwards, we'll be commencing the practical questions. So, whatever we have studied in last 6 or 7 classes, we'll be applying each and every one of them in these questions from now onwards. So, this is your chapter number 11 of your ICAI module, Financial Statement of a Companies. In that, please take page number 11.29. We'll be doing question number 3, illustration 3, which is simple and easy one, not a complicated question. Let's do some warm up. Are you all ready?
Yes, sir.
Are you all ready?
Yes, sir.
You are required to prepare balance sheet and statement of profit and loss from the following trial balance of Haria Chemical Limited for the year ended 31st March 2021. No, this is 2001. Oh my God, 20x1 is always 2001. Old balance sheet. Anyways, Haria Chemical Limited is a public company or private company?
Public company.
How do you say this public company? The word limited is given. Okay, got it. Trial balance as of 31st March 21 is given. Okay. What is the one thing that you have to check in trial balance?
Tally.
Whether the total of the both columns is tallying or not tallying. Or not tallying. Here they've given particulars, two portions. So this is debit column and this is credit column. Okay. Now when you get such questions, do not start reading trial balance. Immediately first thing what you do is come down and see what is the additional information given. So here the additional information is given only on one point, which is closing inventory as on 31st March 21, which is 8,23,000. So only one adjustment is given. Lucky you people are. Now coming back. Inventory 6,80,000 is given. What inventory is this?
Opening inventory.
Opening inventory is already there in the balance sheet and closing is given separately outside. Then this only could be opening inventory. Opening inventory will go where? Balance sheet or P&L?
P&L.
Balance sheet or P&L?
P&L.
You learned in 12th standard foundation, inventory is asset. You should go to asset side. No? Opening inventory is asset as long as that opening inventory is there in your go down. Now this opening inventory, it is assumed that it has been sold during the year and it is converted to your stock, sorry, cost expenditure. So this will go where? In your statement of P&L. Where under statement of P&L? Change in inventory, opening inventory minus closing inventory, changes in inventory. Oh my God. Subiksha is not able to recollect. Okay. Now she's telling that, sir, this could be cost of raw material consumed. Now listen to me very carefully. Sometimes they'll give you inventory, but you'll not be sure whether should I take it to cost of material consumed or change in inventory. So you have to understand the entire business. How will you understand the entire business? When you look at the trial balance, if they give you some indication that raw material is there, they give you indication that we are into manufacturing, we have factory rent, etc. Then this inventory will consider as raw material inventory. So I look into indication. Now, as of now, take it to change in inventory. Later, depending on the language of the question, if I have to change it to cost of material consumed, we'll change it. Otherwise, it will be changed in inventory. So depending on the language of the question, at times you have to make a call whether this inventory will go to cost of material consumed or changes of inventory. As of now, put in change in inventory. In due course, we will finalize. Furniture will go where? In balance sheet under PPE. Wonderful. Discount is an item of income or loss. That is gain or loss.
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 Yes, sir.
Is it discount allowed or is it received? How do you say discount allowed? Sir, this is coming in debit column. All the expenditure and losses have debit balance. So if any ledger has got debit balance, it will come to debit column. So which ledger will have a debit balance? Only those which are of expense and loss in nature. So this is discount allowed. So where do you put in statement of P&L? Other expenses. How many categories we have totally for expenses? 7 categories. First category is cost of material consumed. Second is purchase of stock in trade. Third is changes in inventory. Fourth is employee benefit. Fifth, finance cost. Sixth, depreciation and amortization. Seventh, other expenses. Can I put discount allowed in any of the top 6 categories? No. Hence it goes to your residual category, which is other expenses category. Next, loan to director. Loan to director. Asset or liability?
Asset, sir.
Sir, asset, because I gave loan to director. This money will come back to me in future. So anything that I give and which comes back to me in future is asset. So this money will come back to me in future. And moreover, it is in debit column. Debit balance means what? Asset. I've given this money to director, I'll get back in future. Asset. So it is advance, short term or long term.
Short term.
Nothing mentioned means
Short term.
any loan given to directors or related parties is always going to be short term, because
Short
we
term.
never give the loan to directors and related parties for longer period of time. Directors wants urgent money, so we gave it. So whenever he's got the money, he'll give it back. So always the directors loan, that is advance given to directors or related parties, is for short term period. So this will go to your short term loans and advances. Advertisement, expenditure, other expenses. Bad debts, other expenses. Bad debts will not come in any of those 6 categories. So it goes to your residual category. Commission, it is debit column. So debit all expense and losses. So this is your expenses. Which category? Other expenses category. Now, materials consumed.
Cost of material.
So whatever material you purchased, entire material you consume. There is no opening stock. There is no closing stock. They've given the word material consumed. What is the formula for material consumed? Opening stock plus purchase minus closing stock. So during their whatever materials you have purchased, everything is consumed. So they'll go to your cost of material consumed. So they've given the consumption directly. So there is no opening stock, no closing stock. Whatever is purchased, everything is consumed. Had there been closing stock, they'd have given the closing stock information. Am I loud and clear? So they've given closing stock information. No. Did they mention for raw material? No. Rendavathu, if they are giving you cost of material consumed, which means what? They have done the adjustment of opening plus closing minus closing. Sorry, opening plus purchase minus closing. If minus closing they have done, then the inventory should come inside the trial balance. This is what your 11th basics and CA foundation basic is very, very important. So listen to me very carefully. Raw material consumed is given. Means what? Opening stock plus net purchases minus closing stock is my raw material consumed. Net purchases will be there in a trial balance. Do you agree with me?
Yes, sir.
Opening stock should be there in trial balance separately. It is there. But I am saying the opening inventory, what is there here, this is not raw material. Why? Because had this opening stock, now the question says that it is raw material consumed. Means what? The opening stock is already been added to your net purchases. So what entry did you pass for opening stock? For opening stock, you can pass 2 entry. One entry is statement of P&L, that is trading account debit to opening stock. You're transferring the opening stock to trading account. Hello, what is entry for transferring opening stock to trading account? Trading account debit to opening stock. In the trading account, that is how 2 opening stock you get. Correct? That is how you get 2 opening stock. Imagine if this entry is already passed, then this opening stock will be gone where? In the trading account. Will the opening stock be there in the trial balance?
No.
Think one more time. I am telling you, you have passed an entry, trading account debit to opening stock. After this, if I prepare a trial balance, will this opening stock be there in the ledger trial balance? No. Opening stock, when will it be there in the trial balance? Before the adjustment entry is being done. Before the adjustment entry is being done. So here they're telling that this is raw material consumed. Means what? Opening stock is already added to your net purchases. Means what? The adjustment entry is already passed. When the adjustment entry for opening stock is passed, when the adjustment entry for opening stock is passed, then that opening stock will not come in your trial balance. So this is one method. Second method is what? You don't want the opening stock to be shown separately in the trading account. So you go for adjusted purchase method. This entry is normal method. What is the journal entry for adjusted purchase method? Purchase account debit to opening stock. When do you pass this entry? When here material consumed is given. No, means that with the purchases, this opening stock has already been transferred. What is the meaning of raw material consumed? Material consumed means opening stock plus purchase minus closing stock. So opening stock is already added with the material purchased, which means that when this entity is giving the trial balance, they have already transferred the opening stock from the asset account to the raw material purchase account. Are you able to follow? Online people are able to follow.
Yes, sir.
So for example,
Yes, sir.
material consumed is 23 lakh 19,000. Opening stock is 19,000. During the year, purchases of raw material purchased is, let's suppose, 23 lakh. Okay. Had the question not giving raw material consumed, a question raw material consumed is not given, then how would have my trial balance look like? In my trial balance, the information will be like this: opening stock of raw material 19,000, purchase of raw material 23 lakh. Is this information available to you in trial balance? No, because here when they give the information 23 lakh, it is not purchased, it is consumed. How I can get the raw material consumed? When this opening stock is added to purchases, it becomes my raw material consumed, which means what they did after this trial balance, they passed an adjustment entry. What adjusting entry they passed? They transferred this raw material to purchase account. So purchase account is expense. To increase expense, debit 19,000, and they wanted to decrease this asset. To decrease asset, credit to opening stock of raw material 19,000. You have passed this entry, means the company has already passed this entry, and then they give you trial balance. Now after this journal entry, please tell me what will be the impact of the trial balance? What will happen in the trial balance? Opening stock will not be there, because opening stock is asset. To increase asset, debit. To decrease asset, credit. The moment you give a credit of opening stock asset, this will vanish from the trial balance. So in the trial balance, opening stock of raw material will no longer be there. Do you agree with me?
Yes, sir.
And purchases will be no longer called as purchase of raw material. This will be now called as this is called as raw material consumed. So simply called as a raw material consumed. How much? 23 lakh 19,000 will be the raw material consumed. So now they're giving you this trial balance, which means they already passed the entry for adjustment. So now please tell me, can I call this inventory as raw material inventory? No, because when the word consumption is given, already raw materials opening inventory is transferred in this. So opening inventory of raw material should not come. If it is coming, then definitely this is not opening inventory of raw material. This is some other inventory. So some other inventory will go where? Change in inventory. Now is the logic clear or not clear?
So this material consumed, the closing raw materials also adjusted.
Closing is also adjusted, but closing is not there, I'm telling you. Why? Because had the closing inventory been there, they would have mentioned closing inventory so and so. Here, closing inventory is other than raw material, because if you're giving raw material consumed, then the raw material closing stock also should have been subtracted in your material consumed. If raw material consumed, once again, if raw material had a closing balance, they'll give you two impact. They'll give you closing stock inside the trial balance. Please understand. If closing stock of raw material was there, is there, obviously, like opening inventory would have passed for adjusting entry for closing inventory. So what is adjusting entry for closing inventory? Closing stock account debit to purchase, because they're following adjusted purchase method. So closing stock to purchase. Let's say one value is 10,000, 10,000. So this closing stock should appear where? In your trial balance as closing inventory, it should appear. Is it appearing? It is not appearing. Are you able to follow? Closing inventory of raw material is not appearing in the trial balance. This inventory, what they've given, is the opening inventory. If nothing is given, if nothing is mentioned, this is opening inventory. So closing inventory, if this entry is passed, if closing stock of raw material would have been there, had they passed this entry, this 10,000 rupees would have gone in your trial balance as closing inventory. They would have used the language, but it is not given, which means they have not passed this entry. And still they called as raw material consumed, which means there is no closing inventory for this raw material. So whatever opening stock and purchases you had, everything you consumed, there's no leftover. Had it been leftover, the closing inventory of raw material would have come in your trial balance, because you have raw material consumed. Raw material consumed means what? The closing stock entry is already been recorded. The asset is recorded and the purchase is reversed. Only when the purchase is reversed, I call this as cost of material consumed. So I'm telling you, there is no inventory in the books of accounts towards raw material. So therefore, this closing inventory, what is available, is not the raw material the closing inventory. It is the closing inventory of either WIP, FG, or stock entry. Am I loud and clear? For this, what concept is important? Basic concept is very, very important, which we learned in the CA foundation level. So tell me, at the intermediate level, can I sit and discuss in depth all this point? I can revise what I did now. This I can do. But in foundation, what I did for each and every opening stock item, closing stock item, different methods, different questions we did. Is it possible to do all the questions one more time here? We can do nothing wrong. Who's going to stop us? But if I start doing all of that for everything, will I be able to complete the portions on time? Anybody for that matter, will they be able to complete the portions on time? No. So always we tell that please come prepared with your basics. Because it's not accounting, this is advanced level of accounting. Now are you clear? Plant and machinery. PPE. Plant and machinery, PPE. Okay. Rental. Income or expense. Sir, it is giving in debit side. Debit all expense and losses. This is your expenses, other expenses. Current account means the bank is having a current account feature. So this is your cash and cash equivalent. Cash and cash equivalent. Interest on bank loan. Interest on bank loan. So this interest expenditure. Finance cost. Wonderful. It's finance cost. Preliminary expenses. Other expenses. In 12th, we put under extraordinary item. This is no more extraordinary. It is preliminary expenses, a part of your other expenses. Who's saying this? Schedule 3. Fixtures means what? PPE. Furniture and fixtures. Now this whiteboard I have fixed here. So this is a fixture for me. It's a part of my fixture. So it is my asset. PPE. Wages. Employee benefit. Consumables. That oil is there no for greasing that machine. That is my consumable. Stores and spares. I've consumed it. That oil I've used it for greasing my machine. It is consumable. So it is your other expenses. Freehold land. PPE. Tools and equipment. Tool and equipment. There's something called as loose tools. There's something called as stores and spares. There's something called tools and equipment. Loose tools is different. Tools and equipments are different. Loose tools means what? I can use this for general purpose or specific purpose. If it is general purpose, inventory. Specific purpose means PPE. Spare part, you understand. Stores and spares, you understand. This is tool and equipment. Tools and equipment. PPE. You are getting confused while looking at the word tools. So tools means you said inventory, no sure. After tools, big equipment is not seen to you. Tools and equipments. Have some equipment, big equipment, it's a specific PPE. And have some specific tools which will be used only for this equipment. So it is your PPE. Tools and equipment is your PPE. Okay, not okay. Now, like this, you have 40-50 questions to solve. My question to you, one day before the exam, not one day, you have your advanced accounting as first paper. You will take 6 days to study advanced accounting. I'm telling you before the exams. In those 6 days, will you be able to go through all these 50 questions what we are going to discuss? Will you be able to work out all the 50 questions? No. Which means some question you're going to skip. In that question, what you're going to skip, there could be a possibility of a twisted question like this. Can I say, of all the items that we discussed, this is a twisted item and material consumed was a twisted item and this inventory was your twisted item. Do you agree with me? So what are you supposed to do in all the questions? Whichever adjustment, whichever point is bothering you, what are you supposed to do? Take a highlighter and highlight it. If you're not sure about it, at least what you can do, take a pencil and mark it and put a hand symbol like this. Means what? 1 month later, 2 months later, when I go through this question, no, I will not go through the entire question. I'll stop and go through only that point which is bothering me. This is called a smart work. In every question, you will have at least some 3-4 adjustments which is bothering you. Remaining all, you'll be able to manage. All the questions I'm telling you, 80% of the question you can manage. It will be repetitive question. Only 20% data of every question will keep on constantly changing. So you have to mark in every question that which question is bothering you. Now in pencil, 3 months later in your marker. Because now what you feel difficult, after that becomes easy. Because you get a development of understanding, no, it becomes easy. So don't do the marking now in marker. Now do it in pencil. After 3 months or after 4 months, you can finalize that in the marker. If you still have a doubt in that, put a marker against it. If there is doubt, the doubt is no longer there in that question. Just erase that doubt there and there. Am I loud and clear? So in this, yes, this is already there in group. I've sent it, yes. Now, next is what? Goodwill. Intangible assets. PPE under that intangible assets. Trade receivable. Nothing mentioned is always current asset. So trade receivable is a separate category in the current asset. Dealer's aid is nothing but 8 is nothing but commission. Please make a note. Dealers 8 is nothing but commission. We give commission to dealers. So let's suppose I'm selling a product. I'm appointing a dealer. So dealer is helping me to sell the product, and for that he's expecting commission from me. So I gave commission to him. It is nothing but expenditure. So where does the dealer's aid or commission goes to? Other expenses. Dealer aid is nothing but dealer's commission. Transit insurance. I have borne a transit insurance. Means there's a product that is coming from Delhi to Coimbatore, and there is a risk of damage, accident or theft. So to protect my goods, I took insurance of it. So it is my other expenditure. Trade expenses, other expenses means what? Any expenses that I've incurred during my business, which I don't want to specify. It is general in nature. Multiple expenses put together in my trade. It is called as trade expenses, like your general expenses. Distribution freight. Distribution freight charges, other expenses. Debenture interest, finance cost. Easy. Coming to the credit column. Equity shares, 25 lakh rupees. Share capital, 11% debenture. Always debentures are long-term borrowing. They don't specify. Always debentures, borrowings are long-term. I only told that if the borrowing is given to or taken from directors or related parties, then short-term. Because we take the help from them for a shorter period. But when I issue debentures, I issue for longer period. If I take loan from the financial institution or bank, I take it for long-term period. So always when you take the money from such kind of people, the question is silent, it is long-term. But when you take money from the directors and the related parties, always it is short-term. We take short-term assistance from them. So this is your long-term borrowing. This is your long-term borrowing. Any problem? Bank loan, long-term borrowing, trade payable, current liabilities. Under current liability, trade payable only. If aging is there, aging should be disclosed, otherwise not required. For example, here have they given any aging? Which means what? The due date is still payment for payment is not come. Had this amount been a case where the due date is come and I've not paid for six months or 1 year, then I have to put this under aging category. So aging will come when the due date is triggered and still I have not made the payment. That time aging will come. If aging is not given, then there's a possibility that the due date for this is not yet come. Sales, revenue from operation. Now, will you take the revenue from operation in the notes to accounts and show separately? In the examination purpose, not required. In real life, you will take it to the notes to accounts. But in exam, wherever you have directly one item, for example, trade payable, you have one item directly. Record the trade payable directly in the balance sheet. Directly trade payable in the balance sheet. No need to prepare the notes. If aging is given, prepare trade payable in the notes. Only one item is there. Directly will record in your P&L or balance sheet. Whenever the breakup is to be given, adjustment is to be done, then you have to prepare notes. Rent received, other income. Transfer fees. What is transfer fee? Now, I have two shareholders. Sorry, not two shareholders. I have one shareholder. This shareholder wants to transfer a part of his share to some new person. When he's transferring the share to new person, as a company, I have to do some documentation work. So for doing some hard work for these people, I will charge something in return. So it is called as transfer fee. So basically, for completing the share transfer procedure, the company is charging some fee. For the company, it is an income. Which income? Other income. Profit and loss account. Please understand, in this trial balance, all the item of income, all the item of expenses are still there in your trial balance. Which means what? Now only you'll sit and prepare your statement of P&L. Yes, everybody understand. Now we are going to prepare the statement of P&L. Which means this P&L what has been given balance here, this is the opening balance of previous year. Because current year profit I meant to calculate. So this definitely cannot be the current year's profit. This is opening balance of the surplus. So I told you surplus ka another name is what? Retained earning. Another name is profit and loss account. So this is nothing but the opening balance of the surplus. To come back to schedule 3. I told you this surplus will be called as retained earnings. Also will be called as P&L balance. So what language have they used here? What language have they used here? P&L account balance. So these are the different names they'll try to confuse you. This is the opening balance of surplus, opening balance of the surplus account. Depreciation provision, machinery, 1,46,000. They're telling depreciation provision. Accumulated depreciation. Opening balance or closing balance? It is a balance. Anywhere in the question have they told you to charge depreciation? No. Have they already charged the depreciation? Look at my question. I'm telling you, this depreciation is provision. Okay, so this is provision for depreciation. Is this, once again, is this opening balance or closing balance? Is my first question. If you're saying opening balance, okay. Some people might think that no, sir, this is closing balance, means you're telling depreciation for the current year already charged. Depreciation for current year already charged or not charged? If it is not charged, then in the additional information they'll tell you, please charge depreciation. That they have not told, means it is not charged. Exactly, that is the whole point. Had they calculated the depreciation, the depreciation would have come in your trial balance. What is the entry for depreciation? Depreciation account debit to provision for depreciation. Let's say 1 lakh apna. This 1 lakh will get added to PFD. And this 1 lakh will appear separately as depreciation in the trial balance. Is depreciation appearing in the trial balance? No. Which means this company did not pass the entry for depreciation. Are you supposed to charge it? Yes, you can charge it, but for that you should be given information. So where is information? In the additional information, they should tell, na, charge so much of depreciation percentage. Did they tell? No. Which means we are not going to charge the depreciation at all. So what is the assumption? That the assumption is that except this machinery, all the other assets were purchased at the end of the year. Since you have not used in the entire year, you're not charging depreciation. Am I loud and clear? Then for machinery, why the depreciation should not come? They have not charged it. What to do? Neither they have charged it, nor they are asking us to charge it. If they give rate, we will charge. But they have not given rate, so we cannot charge. So you might think that, sir, they would have charged the depreciation already. No. If they would have charged the depreciation already, the entry they would have passed would have been depreciation to PFD. Had they passed this entry, the depreciation ledger would have got a balance. And that balance would have traveled to your trial balance. Can you find anywhere trial balance? In the trial balance depreciation, the answer is no. And hence, neither have they recorded depreciation entry, nor are we going to record the depreciation entry. So depreciation and amortization in the statement of P&L is going to be 0. When we prepare the PPE, that current year depreciation is going to be 0. Am I loud and clear?
Yes, sir.
Online people, am I loud and clear?
Yes, sir.
Can we do this question?
Yes, sir.
Okay. Let's start.
Yes, sir.
With proper formatting. So leave your 2 pages for balance sheet or 1.5 pages, whatever you feel comfortable, depending on the size of your notebook. 1 page will be for P&L, then remaining for notes. So first we'll prepare balance sheet. Always first balance sheet, then P&L. So the exam, can we prepare P&L first and balance sheet later? Possible, no problem. It can be done. But in reality, always you prepare the balance sheet first because it is part 1 and P&L is part 2. You want to prepare the P&L first or balance sheet first? We'll do P&L first. We'll do. Okay, what will be the heading? No. Before that. Abstract illama. This is full balance sheet. The company will codify. Name of the company. Haria Chemicals Limited. Please write it.
We can do simultaneously.
You can do it. Haria Chemicals Limited. Then next will be statement of P&L as on. Statement of P&L you cannot write. Statement of profit and loss. Please write properly. Particulars. Note number. You don't have current year. You don't have the previous year data. So you just can write 31/3/2001. What is the first item? Revenue from operations. Do I need to give note here? Not required, because in revenue I have only one item. Guys, if you see, in revenue I have only one item. One second, people, there's a lag in the video. One second. What happened? Got freeze, huh? Why? Okay. Now, so revenue from operation is done. Sales 42 lakh 68,000. Please write it down. 42 lakh 68,000. Done. Next is what? Other income. Now here note number. Please stick on to what they have done it. If you're writing first, then it'll come one. But I'm sticking on to note number because you'll do balance sheet first and then P&L. They have done like that. So our note number and their note number should not change. I'll copy paste from here. Note number 7. In exam, if possible, try to do from the balance sheet. It is better because that is how they're expected. If you do it, it will be well and good. So now you have to give the breakup because you have two other income. Note 7. Other income. What is the first item? Rent received and transfer fee. Just write rupees here and leave it, because for everything, if you write particulars and everything, you'll not have time to do it. So do a little bit in shortcut. Rent received. How much it is? 46,000. And then we have transfer fee. 10,000, is it?
Yes.
Total is how much? 56,000. Note number 7. 56,000. Please tell what is my total income? 43 lakh. 43 lakh. 24,000. Round amount. Okay. This is A. Next is expenses. That the first item is cost of material consumed. Online people, are you all there?
Yes, sir.
Okay, what is cost of material consumed? They've given directly 23 lakh 19,000. Write it directly. 23 lakh 19,000. Next is what? Purchase of stock in trade. Is it there? Not there. You can leave it blank. Next is change in inventory. You can do the working yourself, or yeah, actually they'll be expecting a working note. You can put note number 8. To show the working separately. Note 8. Change in inventory. And you can write income, nothing wrong. Now, particulars. Opening balance, closing balance. Can I write OPBAL income? Yes, allowed. In the notes part, you can take that risk. Inventory is given, which inventory they are not specified, so I'm writing inventory. Otherwise, you write specifically it is whether WIP, FG or stock in trade. What is the opening balance given in the trial balance? 6,80,000 is the opening inventory. So we'll go to opening balance. minus closing balance. Closing balance is given outside the balance sheet.
8,20,000.
So it is 8,20,000. Whenever any adjustment is given in the balance sheet, it will go to two places. One, it goes to change in inventory. Second, it goes to inventory in your current asset. Inventory in your current asset. So 8,23,000. So minus 8,23,000. So what is the balance?
1,43,000.
1,40,000. Positive or negative? Negative in bracket.
Negative.
In bracket. So you come back here, put here in bracket 1,43,000. It is creation of expense or reversal of expense? Reversal of expense. Very good.
Reversal.
Next is what? Employee benefit. One item or multiple item? Only one item is there. In that case, you can take directly to the P&L. What is the item? They put
Wages.
the note if I'm not wrong. 9,000. Sorry, 9 lakh rupees. If you want to put a note, you can put a note. For one item, I would prefer not to do it. But they're expecting, so you can do it. Employee benefit, wages, 9 lakh. You can give a note number 9 separately. Wages, how much? 9 lakhs. After employee benefit, what is the next item? Finance cost. How many finance costs do we have? One is your interest on bank loan. Second is your debenture interest. So we have to give the breakup. So finance cost. So your change in inventory was what note number? 8, is it? 8. The employee benefit was 9. Finance cost will be 10. So note number 10, finance cost. Note number 10, finance cost. Under that, we have two items. One is your interest on bank loan. On bank loan, which is how much? 1,16,000. And then you have interest on debenture. Debenture interest, which is
55,000.
55,000. Okay. So total put together, what is my total finance cost?
1,71,000.
1,71,000 is my total finance cost. Okay. Should I reduce the thickness of my pen? Okay. Okay. After finance cost, next is depreciation and amortization, but we don't have any depreciation here, so we leave it blank. So after depreciation amortization, next is other expenses. Other expenses. Other expenses, we have multiple items, so we'll give a breakup. So 11, note number 11. This thickness is fine. Okay, let's go one by one. Other expenses, if I come from the beginning, discount is 40,000. So discount allowed it is. Discount allowed 40,000. Next is advertisement 20,000. Advertisement 20,000. Bad debts 35,000. Commission 1,20,000. Hey, wait, ma. Confused now. Commission 120. After that, rentals 25,000. Then preliminary expenses 10,000. Can you write PE and come like this in exam? No. Notes only, but அதுக்குன்னு சொல்லிட்டு இவ்வளவு எல்லாம் பண்ணக்கூடாதுல்ல. I'm giving some free hand. That doesn't mean that everywhere you'll take advantage. No, 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 no. Then consumables 84,000. Then dealers aid is also called as dealers commission. How much? 21,000. Then we have transit insurance. How much? 30. Okay. Then trade expenses 37,000. Amma. How much? 37,000. Then distribution freight 54,000. 54,000. So total how much? 4 lakh 86.
76,000.
Who said 86? Rudra, you want to record over expenditure in your business, eh? 4 lakh 76,000. Online people, please confirm.
Correct, sir.
Now, 4 lakh 76,000. Please tell me what is your total expenses? 30? 23,000. This is called as B. We don't have any extraordinary exceptional items, so we can call this as profit before tax. So no tax, we can call that as profit after tax also. But please write PBT. Profit before tax. In bracket A minus B. How much it is? 6 lakh 1,000. This is your closing balance of the P&L account, which will be adding to the opening balance of P&L, which is already existing in the trial balance. Minus tax 0. So 6 lakh 10,000 rupees is your profit after tax. 1 lakh 10,000. 1,000. Okay. So profit after tax. Any problem? Without forgetting this, you have to add in the surplus with the opening balance. Will you forget this? So far easy. Online people, so far easy.
Yes, sir.
Okay. Now balance sheet. Heading for balance sheet, please. Hey, how many times Arya, man? Arya only one time. That's all. Balance sheet as on 31st March 21. Not 21. You I'm saying 21. This is 2001. Format. Hey, first particulars, then note number, then 31st March 2001. Okay. In that first main heading, equity and liabilities. Underline. In that, the first item is shareholders fund. Under that, we have share capital, and B is reserves and surplus. Do I need to write money received against share warrant? Not required, because in this question it is not there. So this is note number 1 and this is note number 2. Can I go to note 1? Note Venumava. As a CA, what is your job? To give disclosures. What disclosure are you supposed to give? Authorized how much? Issued subscribed how much? If there's any call scenario, it needs to be adjusted. Who will do that? Venumava. Note 1. Share capital. Under that, what is the first thing? Authorized capital. What class of share is this? It's equity share. This 25 lakh rupees is the total capital. Divide by 10 means how much? 2,50,000. So 2,50,000 equity shares of rupees 10 each. Kritin is saying, sir, do we need to put the numbers or can you put dash dash dash? What they have done, we'll see. They have put it. So in 12th, we had the habit, or in CA Foundation, we had the habit that if the authorized number of shares is not given, leave it blank. But if you assume that whatever the shares are issued, the same shares are authorized, you can put and come, nothing wrong in it. 25 lakh rupees. Next is issued, comma, subscribed, comma, paid up capital. 2,50,000 equity shares of rupees 10 each. Please don't use this word RS. Please use the symbol. How much it is? 25 lakhs. So this is paid up capital. Always the paid up capital travel to your face of balance sheet. Always paid up capital travel to your face of balance sheet. So in this, what is the principal disclosure? 3 items that you have to disclose: quantum of shares, class of shares, and the face value of the shares. Any problem in this? Now please go to your balance sheet and write 25 lakh rupees on the face of the balance sheet. 25 lakh rupees on its face. Now in reserves and surplus, do we have any type of reserves? Do we have any reserves? Reserves, I'm asking. Reserves. No reserve. We have surplus. What is another name of surplus? Retained earnings. And what is another name of retained earnings? Profit and loss balance. So there's no reserves. We have only surplus. So note number 2. Note 2. Reserves and surplus. Under that we have only surplus. By the name profit and loss account. You can do in the vertical format, you can do in the horizontal format, whichever is convenient. Now opening balance. What is opening balance? So opening balance is given in the trial balance. Where? Here. Profit and loss account, opening balance 1,39,000. Add profit of current year. What is the profit of current year? 6,01,000. So what is your total profit? 7,40,000 rupees is your total closing profit. So this is your closing balance. 7,40,000 rupees. That's all. There's no other item. Any problem? Online people, any problem?
No, sir.
Okay. Next, come back. We're done with the shareholders funds. What is the second category? Share application meaning pending allotment. That is not that, leave it. So now the second category becomes my non-current liability. Non-current liability. Is it non-current liability or non-current liabilities? This non-current liabilities. So what do we have as non-current liability? Under that we have first item, long-term borrowing. Long-term borrowings. So note number 3. In that, the first item is 11% debenture. 11% debenture. How much? 5 lakh rupees. Second item, bank loan 6 lakh 45,000 rupees. Bank loan 6 lakh 45,000 rupees. Any other amount? Any other long term borrowing? No. So what is my total? 11 lakh 45,000 rupees. 11 lakh 45,000 rupees. What is the second item generally? Deferred tax liability net. Is it given? Not given. Leave it. C item. Other long term liabilities. Do we have other long term liabilities? Think. What does come in other long term liabilities? What does come in other long term liabilities? Now, when I'm asking this question, listen. When I'm asking this question, you're not able to instantly think of it, which means that your memory is not having that information properly. So how do you get back that information to your memory? With more and more revision. Sometimes revision may not be sufficient. Then what are you supposed to do? Sit and practice. Take the entire balance sheet format from top to bottom, all the note items, everything you have to write and practice. So until you get that, keep on recollecting, keep on writing. This is the only step. You cannot take any shortcut. Tell me, if you have any other solution to remember, tell me. So Pratik sir has got one pill. If you take one pill, instantly you'll remember everything. Do I have pill like that? In case I had, I would be the richest person because I'll sell one pill for at least 10 crore rupees. Correct? No? There's no pill like that. Nobody has got it. The only way to remember is to revise, practice. So what comes under other long-term liabilities? Trade payable, long-term trade payables. Next, others will come. Under others, what does it come? Premium on redemption of preference share or debenture. Then security deposit. Yes. Do we have anything like that? Nothing is there. We can leave that also. Next is long-term provision. Anything is there in long-term provision? Provision for leave encashment, gratuity, provision for warranty. No. So only one item in non-current liability. That's all. Okay. Third category, current liability. Please tell me in current liabilities, what is the first item? Short-term borrowing. Do we have any short-term borrowing? There is no short-term borrowing. Leave it. Next item, trade payables. Yes, we have trade payables. In the information, are they asking the agings for trade payables? No, we can directly record without the notes. How much it is? 2,08,000. 81,000. Okay. After trade payables? After trade payables. Generally, after trade payables, what does it come? In your format, what does it come? First, you say short-term borrowing, then trade payable, then short-term loans advances. Do you have short-term loans advances? There no. Correct. I'm coming in order. What is the first item? Short-term borrowing, then trade payables, then other current liabilities, then short-term provision. Other current liabilities, under that we have a short-term borrowing. We have no. So we don't have debtors. Okay, we don't have. Okay, that is loan. Okay, that is asset. Okay, leave it. Okay, now what do we have? Next item. Short-term provision. Do we have? No. So only trade payables is there in current liability. Provision for depreciation. Where does it go, my dear? I told in short-term provision and long-term provision, you should record only that provision which you are planning to pay in future. Are you going to pay the provision for depreciation in future? No. So you have to reduce from asset. Anything else? Nothing? Online people? Nothing?
No, sir.
So please tell me the total. What is 6 lakh?
66,000.
66,000. And this is called as total amount. Please go home and practice the format properly. Next is what? Point number 2, assets. See, equity, liability, assets, this alone you write in capital. Rest all running is fine. This alone you write, these both alone in caps. Next is in that first item is non-current assets. Under non-current asset, what is the first item? Property, plant, equipment. Property, plant, equipment, and intangible asset. We have to give a note to it. Note number 4 is given. Note number 4 to be given. Now here, listen to me very carefully. See, in the previous session, we understood there's a format. There's a cost information, 4 column, depreciation information, 4 column, and then net balance. Now, in exam, we will not give such a detailed presentation. We'll give very simple presentation. Listen to me very carefully. Don't do anything. Just observe. So now, the furniture balance, what we have here, the plant and machinery, what we have here. What balance is this? See, depreciation is not charged. Do you agree with me?
Yes, sir.
Had the question already charged depreciation, they would have passed for entry called as depreciation to provision for depreciation. Depreciation had to debit it, the ledger would have opened, the ledger would have had a balance, and that balance would have been reflected in your trial balance. I don't see anywhere depreciation recorded here. Am I clear? Nor in the additional information have they told you to calculate the depreciation, ascertain the depreciation, calculate the depreciation, 10%, 12% like that, not given. So in this entire question, we are not going to bring the depreciation into picture. So whatever the asset value is there, we'll take it as it is in the balance sheet. But there's only one item for which we have provision for depreciation. So we will present the depreciation or the PPE in this manner in the exam income. You will open a tabular column, PPE. In the first column, it will be particulars. Second column, gross block, always at cost. Depreciation and net block. Depreciation and net block. Note 4. Property, plant, equipment. Here, when you come to note, you can write PPE income. In main balance sheet, you cannot write PPE income. In main balance sheet, write the full name. But in note, you can use the shortcut. Now, particulars. Gross block, which is nothing but the cost of the asset. Then depreciation here means accumulated depreciation. And then net block. Here, guys, when they say depreciation, people get confused. What? So depreciation is given 146, but in finance, sorry, in statement of payment, they have not put depreciation amortization. Arey donkey fellow, this is not the depreciation amount. It's not expense. This is accumulated depreciation. This is the closing balance of the provision for depreciation account. What we used to do in the balance sheet of the proprietorship concern or partnership concern, we used to record the gross block minus PFD on the face of balance sheet. Now, the schedule 3 is telling that don't do this plus and minus drama in the balance sheet. Do all the plus and minus drama in the notes to accounts. So for that, they have given a format. So gross block minus accumulated depreciation minus net block. Here, I don't have any information on addition of asset, deletion of asset, depreciation. So I'm not putting any column. So directly I put the closing balance. So this is the opening balance, closing balance of accumulated depreciation, closing balance of the asset account. What is the first item? Freehold land. We want to go with the order of the balance sheet. I mean, order of the trial balance will go. First is furniture. Furniture 2 lakh. Maybe we would have purchased on 31st March or 30 March. We have not used it. So depreciation is not there. So whatever amount is there, 2 lakh is my net amount. Next amount. Next amount. Plant and machinery. Plant and machinery, we have a opening balance and PFD. So 8,60,000. 8,60,000 opening balance at cost. And PFD is how much? 1,46,000. Guys, in PFD method, always the cost will be reflected. Sorry, asset will be reflected at Cost. So gross block means at cost. From that, if I minus accumulated depreciation, I get the net block, which is WDV. How much is WDV of plant and machinery?
7,14,000.
7 lakh
14,000.
7 lakh 14,000. Okay. Next item is what? Where is fixtures? Fixtures 3 lakh rupees. No depreciation, no accumulation of depreciation. So net amount WDV is also 3 lakh. Then freehold land 15 lakh 46,000. We can never depreciate this because freehold land is always a appreciable asset. How much it is? 15 lakh 46,000. Then tools and equipment. Be very careful. That is a dangerous item. Tools and equipment. Don't put loose tools and come. How much? 2,45,000. Accumulation or provision is 0. So my closing balance is 2,45,000. Then that's all for PP. What you can do is you can create one for this thing. Yeah, we can create intangible asset like this here. Intangible asset like this here. PP like this you can clear. So PPE and this is for intangible. So intangible is what? Goodwill we have. What is the goodwill value? 2,65,000. No amortization. So closing balance is also 265. Okay. Now you have to get the total separately for PPE and total separately for intangibles. How much is for PPE?
30 lakh 5,000.
30 lakh
5,000.
Now guys, always the net block will travel to your face of balance sheet. Always net block will travel to your face of balance sheet. 30 lakh 5,000. And this is 2,65,000. Now the total of this will be your property, plant, equipment in the face of the balance sheet. How much it is? 32 lakh 70.
32 lakh 70.
Okay. What we'll do is we'll show it separately under this. So under property, plant, equipment, we have 4 categories. The first one being property, plant, equipment. Note 4, please put it here. Note 4, please put it here. What is second one? B is intangible asset. This also you can put note 4 or separate note 5. Since only one item is there, they have done directly. But you're combining in note 4 means then put both same number for both the items. How much is PPE separately? 30 lakh 5,000. And how much is for intangible assets? 2,65,000. Now point C and D will not come. C is what? Capital work in progress, and D is intangible asset under development. Both are not as relevant. What is point number 2? Under non-current asset. First is property, plant, equipment, and intangible asset. What is second item? Non-current investment. Do we have any non-current investment? Do we have any non-current investment? No. Leave it. Third item. Deferred tax asset net. Do we have? No. Leave it. Fourth item. Long-term loans and advances. Do we have like that? No. We have a loan given to director. But what did we assume? Will we take it as? Yes. We give the assistance to the director only for shorter period. So this is short-term loans and advances. So any other long-term is there? No. That's all. Any other item of non-current asset? No. Okay. What is the next item? Current asset. In that, what is the first item? Order you cannot change. First item. First item is cash and cash equivalent. It's current investment. Oh my God. You can't change the order. Current investment. Do we have current investments? No. Leave it. Then you have next inventories. So your first item is what? Inventories. So you already prepare inventory ka note? Do we need a note for it? Sir, no. That inventory note what we prepared is for change in inventory. Here inventory means what? Only closing inventory. So directly closing inventory, take it from adjustment and write it. How much it is? 6 lakh? 8 lakh 23,000. Okay. 8 lakh 23,000 directly you can take it recorded. Next. Next item is trade receivable. Trade receivable. Do we have it? Yes. Trade receivable. Only one item. Aging is required. No information on aging. Directly the outer column. How much? 4 lakh? 42 or 40,000? 4 lakh 40,000. Okay. What is the next item? Cash and cash equivalent. So note number 3. Cash, point 3 was cash equivalent. Note number 5. Please go to 5. Note 5. Cash and cash equivalent. In that, what is the first item always? First, always cash. So how much is the cash? 8,000. And then you have second item. No, as per the schedule 3 format. Current account balance, correct. Bank balance, current account first. Then fixed deposit from the day you are investing up to 3 months. Up to 3 months. Do we have any fixed deposit maturing within 3 months? No. But we have current account balance. So how much is your current account balance? 45,000. Okay, very good. So coming to C, you'll have 2 items in that. One is fixed deposit maturing beyond 3 months but up to 12 months. Do we have anything like that? No. Is there any margin money held? Any bank balance kept as margin money? No. Only these 2 items. So what is my total cash and cash equivalent? 53,000. My total cash and cash equivalent is 53,000. That's all? Sir, no. What? That's all. Fourth one is what? Short-term loans advances. Short-term loans and advances. We have director. You have to show the disclosure separately. So note number 6. Note number 6. You can write short form here, STLA. Loan to director. How much? 80,000. Loan to director 80,000. Loan to director 80,000. Next. That's all. Everything is taken care of. Now total, please. 46 lakh 66,000. Both sides matching? Yes. So in intermediate, the first and foremost thing that you take care of is the schedule 3 ka format. But the complete base of preparing this is coming from your CA foundation, where all the adjustment that you have done, all the adjustment that we have learned there is somewhere going to be applied here as well. Am I loud and clear? So basics needs to be very strong when I come from the perspective of the application of the adjustment entries. Though we'll try to recap it here wherever possible. That is one part which you have to be very strong with. The second part which you have to be very strong with is the presentation of the financial statement along with the disclosure part. Very, 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 very important. Am I loud and clear? Am I loud and clear? Yes, comfortable? Now the moment you're looking at the item, you're able to understand which classification it is. If somebody asks you why this classification, are you able to give the justification? Yes. Until you get the justification, keep on asking yourself the questions. We don't want that CA word to be there dumbly or as a prefix to our name. We want that CA to, flow in our bloods and veins, nerves. So be a pro CA, not a dummy CA. Correct? No? So tomorrow morning, what is your status? You have colleges, all of you?
Yes, sir.
Anybody can bunk the class, anything like that?
Yes, sir. You can bunk, sir.
If you can bunk, then I'll have morning one class. I'm planning to do 2 or 3 questions in the morning. Evening 3 hours, maybe 2, 3 more questions. Is what my plan was. Because Tuesday result is expected. So definitely that day we cannot have any class. And definitely 3 days after that also it's a little bit challenging because we have a lot of arrangements to do. So I thought if morning you can come, everybody, then I'll keep class, or else I'll not keep. Because already a few of you are there. So if everyone is coming, then I'll keep morning class, or else not.
Okay, sir.
You'll come? Akshara is saying no. Why, man? What happened to your attendance? Then how are these people coming?
Sir, she has 18 days absent, sir.
Okay, I'll put a poll in group. If I'm getting at least a majority of people, then we'll go ahead with it. So I'll put a poll after lunch today. Okay, if possible, tomorrow 2 hour session, maybe we can have 11 to 1. 11 to 1 is fine. We can attend half day, college half day here. Or how is it? No, if you're not going to college, then I can take class from 10 o'clock morning. 10 o'clock to 1 o'clock we can do, or 10 to 12:30 we can do. Evening will be 4:30 to again 7:30. No, I want 2 sessions, I'm telling you. एक साथ कैसे हो? एक साथ people, you want like that?
Yes, sir.
If you guys are willing to sit, I have no problem. The evening I will not leave because evening also I want to take class. Continuous till 7 will do.
Yes, sir. 10 to 7, sir. Yes, sir.
You bring lunch. What is there in that?
Break, sir.
We'll give break. No, half an hour break. I'll give lunch break.
Yes, sir. Okay, sir.
Only half an hour. Amma, how much time you want to eat?
Yes, sir. 10 to 7, sir.
Okay.
Yes, sir. 10 to 7, sir.
Yeah, I will buy the ठीक है, we'll make a call in the WhatsApp. So WhatsApp group will decide by today or tonight we have to finalize it so that I can make the proper arrangements and planning. Chalo people, that's all from my side for this session. I'll see you all in the next class with the next new sums. Until then, bye bye. See you. Take care.
Thank you, sir.
Thank you.
Thank you, sir. Thank you.
Thank you, sir.